Okay, recording this video on Sunday, the 10th of April 2016. It's about 4:27 p.m. Chicago time. It's about 11:27 a.m. here in Hawaii on the beautiful island of Kauai. Going to be going surfing in a couple of hours' time, but I did say to record a video this weekend on the global macro charts. So whether I'll put this out on the Sunday or whether I'll wait till Monday or Tuesday, don't know yet. I feel as if I've been bombarding people with emails over the last week or so, and so I don't want you to kind of just switch off and feel as if I'm abusing your email address. So anyway, maybe I'll wait a day or so before putting this video out. The two things to say about this video, it's going to be the global macro charts, and what we're seeing is a combination of trends that have started to kind of power ahead and markets that have started some strength, but it's still a little bit too early before calling a bottom and kind of jumping on board. That's the first thing to say. The second thing to say is the reason why I'm saying that is because you have to be in tune with what is happening on your highest time frame. Now, when I'm day trading, my highest time frame is the 4500 tip bar charts. When you're swing trading, these charts are daily charts, but they're using two other higher time frames, a 3-day chart and effectively a 9-day chart. So it's not weekly and monthly, but it's the highest time frame chart. And as I go through these charts, what I want you to focus on is the boldest lines, which is the highest time frame swings on better sine waves. So if this were a day trading chart, these kind of bold lines would be representing what's happening in the 4500 tip bar chart. Because these are daily charts and we're looking at global macro, this is essentially a 9-day chart looking for swings on better sine wave. Now, they will keep you out of trouble. If you're always trading in the direction of what is happening on that highest time frame, you will get the trend direction right. And so we're going to see on these charts places where we're still a little bit too early because we've overshot, or places where the cyclical supports on these highest time frame have already come in, or the resistances have come in and the trends are now ready to kind of break, and the timing is right. So as I roll through these charts, just focus on those highest time frame charts. And the setup that I've got is these two kind of windows, one with the system view of the multiple time frame charts, where we've got white bars, downtrends and weakness, and red bars will be strength and uptrends, and then the same price activity, exactly the same, with the sine wave lines on here, but looking at better momentum is on here and better pro-am is on here. So the system view will tell me just generally if we got strength and weakness in price, and then if I can add in the interpretation of volume and average trade size, that helps me to kind of pick good entry points. Now, crude, we've been in this mega downtrend, and what's interesting for me, and I've been talking about this all year, since the beginning of the year, been saying the story has been consistent. In the first quarter, we would find a bottom. In the second quarter, we would test that bottom. And then in the second half of the year, the third and the fourth quarter, the uptrend would start. Now, what we've had in crude is all the exhaustion sell patterns down here, down at the $30. You can see exhaustion sell. That clears out a market. Everybody forgets about it, but it wasn't too long ago, 3 months ago, that people were, there were people calling for $15, $20 oil or whatever. Those are all the news stories to kind of get you short, get you out of your positions, kind of scare you out, and that's why I've had this exhaustion sell volume. With bullish divergence patterns kind of coming, this first exhaustion buy is short covering rally. Okay, now this is the line to watch for. We've got cyclical support, we're still below it. So that means maybe we'll run pullback end of trend on that highest time frame, but we've still got inherent weakness down here. The only thing that we put down at this bottom is pullback to end of trend on the lowest time frame there. We busted through cyclical support on the next, the intermediate time frame here. We've still got to put in, it probably won't signal pullback end of trend, but it will signal resistance and support down here. Because we've continued to bust through these supports, we've only had a little fraction of strength up here. We still have to test back down. So in the crude chart, we've got everybody's excited that we put in this big kind of jump today on Friday, bullish kind of pattern. We've got professional money kind of maybe buying a little bit of a breakout there, but it is not fully tested down to the lows. When it does that, that'll be the time to get in, but not yet. The other chart that's very like this, but the pattern is a little bit more extreme, is copper. Copper and crude, very important commodities. Here, this is the cyclical support that you see on beta sine wave. We're so far below this, we have to make pullback to end of trend on that highest time frame. Again, we put in a bunch of pullback to end of trend signals on the intermediate and the lowest time frame. We've got our exhaustion sell, we've got our bullish divergence kind of come in. We've had this strength over the last short while from $2 busted up to 232, but we're coming down at the moment. We've still got to put in that pullback to end of trend on the highest time frame. That energy has to be, that downside energy has to be worked out. The trending energy has to be ended for then us to go through a little bit of consolidation from which we can then break into the next uptrend. So those are the critical things to watch. It's like we've still got some downside energy to play out on crude and copper. And the mood has changed. Everybody's trying to find this bottom, kind of jump on board an uptrend that is developing in these markets. And so this is going to be very skittish, in and out until we get a clean, all this downside energy is kind of washed out of the system and we can get a clean break forward. Until we get that, we're going to have this jittery kind of moves backwards and forwards. But that's what I'm looking for on these two patterns, is to make pull back to end of trend on the highest time frame, maybe not on the crude chart, but a more cyclical support, resistance and support on the intermediate time frame before this is all over. So it's too early. Once those things happen, this will be the ETF to play, RSX, which is the Russian market. And the reason I'm interested in this, because the Russian index heavily weighted towards oil and gas, plus we've had the Russian ruble, I think it's almost halved in value over the last 4 years or something like that. So we'll get a double play. RSX is going to be the interesting thing for me. Again, we're still playing down. We've had this initial break. The down 2015 was the exhaustion sell down here, and then we double bottom it down here at $12. We've started this uptrend kind of going, but we've still got some downside energy to work ourselves out on the crude chart. So that's what I'm going to be playing once it all kind of lines up nicely. Now, in terms of markets that have broken out and kind of got going on the upside, we've got gold and silver. They have played out nicely. So let me show you silver. So again, here's the highest time frame on silver. We got our exhaustion sell and our bullish divergence kind of come in here. That has played itself out now. So the highest time frame, play in tune with the highest time frame. We start to get our break to the upside here. We've got a little bit of weakness over the last couple of days, which is these kind of white bars here. As soon as we bust above these resistances on the intermediate time frame, kind of up here at 63.5, I think that number is there, we'll be busting into an uptrend here. And so silver's kind of nicely bottomed there with that pattern. We're ready to jump on board. And gold already started. So this downside pattern, yeah, we overshot the highest time frame here, and we played out pullback to end of trend on the intermediate time frame. Because we overshot here, it was kind of shallow. I mean, look how it looks different. This is the difference between copper. We're going to make pullback to end of trend on this highest time frame, but on gold, it's a lot shallower in terms of the overshoot here. We put in our intermediate time frame pattern with exhaustion sell bullish divergence, and we've broken into an uptrend. And now all of a sudden we've got cyclical resistance on the highest time frame come in here. That's what these white bars are up here. Busting above there, busting above 1300. This thing is kind of just on its way. GDX is the gold miners, and you can see here, it's kind of a little bit of a combination of the gold and the silver pattern. Although it does actually look more like the silver pattern here. Look at this, playing in tune with your highest time frame. The supports come in here. We've had our exhaustion sell, bullish divergence, flush patterns. We've had a nice little pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame. We start to bust into an uptrend here. There's our low risk entry point. I mean, right at $12 or whatever it was, kind of down here on GDX, bang, we're taking off to the upside. Now we're breaking through all these resistances. This exhaustion buy volume is getting the move going. Remember, this one is at the end of a very, very long downtrend. So we've busted up into an uptrend move. Don't think that's short covering rally because it doesn't really count with an ETF, but it's kind of getting on board this. We're just breaking to new highs. So too early on copper and crude. Gold and silver looks like we've bottomed out nicely on those, and those are taking off to the upside. Now, bonds and equities. Bonds, again, playing in tune with the highest time frame. We've been in this big uptrend because we've broken above cyclical resistance on the highest time frame. We had this weakness where we had to come in and then form our pullback to end of trend, having had our exhaustion buys and bearish divergence. So again, we're in tune with the highest time frame. We've busted above another important cyclical resistance, and we're breaking into this big move to the upside here. We've had no exhaustion buys like this one that kind of topped us out here, so we're continuing to go up. So, and I think as we're going to have some weakness in equities sometime in the next couple of weeks. I think there's still money's a couple of days, and then we're going to have a bounce, and then we're going to continue. And let me show you why I'm saying that on equities. So we've got the strength in the bond market. The equities market, we're doing this. So again, highest time frame, we busted above cyclical resistance on the highest time frame. We've been this mega uptrend for equities, bang, 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 all the way up until we put in our exhaustion buys and flushes and so on. Finally, and we've got some weakness after that, and then we've been coming into this support to resistance play, and we bottomed here with our flush patterns broken into uptrends above cyclical resistance on the daily time frame. We've been playing above the intermediate time frame. What I'm looking for is a little bit of weakness, seasonal weakness, because of the tax time over the next few days into the 15th, and then a push back up, which will form our pullback to end of trend on the daily time frame. That should be syncing up with cyclical resistance on the highest time frame here. So that'll be a little trending move on the lowest time frame, syncing up with cyclical resistance on the highest time frame. Remember, we got this cute little Rambo pattern here that printed a couple of days ago. So expecting a little bit of tax time weakness and then a bounce back in to give us that pullback to end of trend pattern. Then what happens after then? We're going to have cyclical resistance coming on those highest time frame. We'll be into the summer doldrums. Around that time. So let's see if we get some weakness after that in the equities market. But we're just playing in tune with this until we get that timing kind of right on the highest time frame. So those are all the kind of investable markets, if you like. Let's look at currencies, and I've been talking kind of non-stop about the Japanese yen. Look at the Japanese yen, and so on. And again, the mega downtrend that we've had, bang, 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 white bars, and then pullback to end of trend plays itself out. We kept on busting through here to the lows. This one was trying to make, again, on the highest time frame, this pullback to end of trend pattern, but we'd had intermediate, another lowest time frame pullback to end of trend. We've had our exhaustion sells, flush patterns, and so on. That's a short covering rally, exhaustion buy there, and then we bottom out again, and we're looking to make that pullback to end of trend kind of move on Japanese yen. And no, we've got so much strength going on here, we've busted. So we're busted above resistance, we're in an uptrend here. This exhaustion buy volume is getting the move going. The first one would be short covering rally, and then so people are triggered out of trailing stops and whatever. This next one is jumping on board this and kind of realizing that the yen is going stronger and stronger, and you can see it's just busted up. And that was our low risk entry point, kind of around here, 83.5. And bang, we're just busting into an uptrend here. Now this is all counter what the Japanese central bank, the Bank of Japan, kind of wants. They want yen weakness. They don't want yen strength. Yen weakness translates into equity market strength in the Nikkei 225. And so how they're going to respond to this, I do not know. That's kind of obviously going to weigh on the market, because if this gets out of control, they will definitely kind of intervene. But all of a sudden, we're starting to break Japanese Bank of Japan wishes, and their policies look like they're being traded against at the moment. So fascinating what's happening in Japanese yen. Now, that means the yen carry trade gets under pressure. So if we get two things going on, we've got kind of equities weakness, and we've got Japanese yen strength. All of a sudden, those yen carry trades just look horrible, and that becomes a virtuous circle in as much as they start to unwind. The two things happening together kind of cause a dramatic kind of unwind. So watch for that as the yen strengthens, and if we get a nasty kind of sell-off in the equities market as a result of that. Biggest component of the dollar index is the yen, and so we've had, again, trading within the highest time frame here. We'd broken into dollar index, this big uptrending move. We were playing around our cyclical support on the highest time frame, and then we bust into this uptrend, bang, here, That was our low risk entry point, kind of back here, and then bang, all the way to pullback to end of trend on the lowest time frame, the intermediate time frame. Bearish divergence comes in the highest time frame, pullback to end of trend at 100, and that's where we floated at this point here. I was thinking a couple of months ago maybe we'd just bust through here and kind of keep going, but no. Rambo pattern at the highs there, and we've had this weakness, and we've kind of come back in those highs, and now we're breaking 2 time frames. So the dollar index is weak. It's not as if everything is going against the dollar index, but the Japanese yen, which is the biggest component, is, and the euro is starting to go against it. The pound less so. I think we're going to have a pullback in the Aussie and the Canadian, but those are small components. But the dollar index, we topped out. Cyclical resistance, again, play with the highest time frame here. We're breaking into downtrends. The theory on the better sine wave, once we start doing that on these 2 time frames, that means that we've got to go at least to a pullback to end of trend move on dollar index and some kind of exhaustion sell. We're sitting at a critical level. I mean, this level at 94s, 95s has been absolutely critical over the last year. And we're sitting at it, we've broken our supports, and we have no exhaustion sell on the downside. So one of these days, this is going to crack, and it's going to crack big, and we're going to generate one of those kind of big exhaustion sell moves. The dollar and the Japanese yen will spike, and so we're going to see some fireworks in the dollar index over the next couple of weeks, so watch for that. And who knows, maybe that'll come with some kind of big crack in the equities market. Don't know. Euro. So again, playing off the biggest time frame here. We kind of topped out. Resistance kind of comes in. We top out and we break into this downtrend. We play with support and then we break, and we've gone all the way pullback end of trend. I mean, it's a classic. So here's the pullback to end of trend on the lowest time frame. It's a dark red dot because that signals early. That's an early end of trend, but it came with exhaustion, sell, bullish divergence, and flush down here right at 105, and then we go pullback end of trend on the intermediate time frame, and then finally pullback end of trend on the highest time frame. So you can see how the end of trends ripple through the time frames, and normally it would look traditional technical analysis would say that looks more like a head and shoulders pattern, because you get your left shoulder, inverted head and shoulders admittedly, left inverted shoulder here, and then this typically would be the head move where the end would come down further than this shoulder, and then this final pullback to end would be a right shoulder on an inverted head and shoulders where this would be higher than this pattern. But it's that's, for me, it's the beauty of better sine wave, is that it gives us effectively a head and shoulders pattern that we would normally see in traditional technical analysis. But a technical analyst would look at this and say that's not a head and shoulders pattern, but it is on better sine wave. Lowest, intermediate, highest time frame. So once you've done that, that's a short covering rally. That exhaustion volume kind of going on here. Bearish divergence kind of comes in. We come back, settle into. We get a dramatic sell down here with this big blue. It's all been these big blue professional spiky bars, if you remember me wittering on about those and how we play into those and so on. And so now, we've got a pullback end of trend on the intermediate time frame, but we've got no exhaustion buy, and we've got this support to resistance that we're playing out on the highest time frame, and we've broken. Look at all this red going on here. We've broken into a proper uptrend here, and we're just going to be breaking above resistances. So all of a sudden, the euro is looking a little stronger. Now, whether this is kind of investment flows into the euro because of good times, I don't think so. I think there's 2 things going on. First, I think there's a rush out of the pound into the euro because of worries about Brexit, and the second thing is I think people are repatriating funds into the eurozone because they need to shore up balance sheets. So we get strengthening currencies for 2 reasons. One, things are going very well, and things are about to go very badly. So the euro is kind of strengthening. So that's the second component of that dollar index, which is Japanese yen is the biggest component, the euro is the second biggest component, and all of a sudden those are both looking pretty strong. Japanese yen has taken off, and I think we're about to see the euro take off to the upside. Now on the downside, British pound, and again I keep on going on about this chart. We topped out, pullback end of trend, broke into this big downtrend. Again, the highest time frame support to resistance came at its support here, and it's trying to find a bottom, but it's early days. There's an early end of trend on the lowest time frame. We've got we've got an exhaustion sell. We haven't had our bullish divergence pattern yet. We've got no breaks to the upside and so on. We had a little bit of strength over the last few days, but until this Brexit business, the vote's done, kind of the end of June, this thing is not going to decide which way to go. But I think there are people kind of a little bit scared, and so they're taking money out of the pound and putting into the euro. So we've got that flow maybe happening at the moment, but no strength in the pound as yet. And if you look at your commitment of traders numbers, the pound is looking the weakest of the lot, whereas the euro is actually looking okay. So here you go. Let me just show you those two charts on the commitment of traders for the pound and the euro. This is weekly and monthly, and this is the commitment of traders numbers that I flip upside down. You see the pound negative, and nothing kind of going on here. No bullish. This was an early bullish divergence pattern, didn't kind of work out, but this is really bad at the moment. Contrast that with the euro, bang, bang, bang. So they're totally changing their tune on the euro, having flipped from being negative 50 plus type readings down here, negative 18. Bullish divergence pattern came in here at the lows, which is kind of nice. And so all of a sudden that is changing tune on the euro, and the pound is not. And let me remind you, the commitment of traders on the Japanese yen, and that's where they changed their tune here. Look at that bottom. Bullish divergence on the monthly and the weekly charts, and all of a sudden they flipped above the zero line, and all of a sudden we're kind of going to new highs. So on the multiple time frame charts, you can see the strength in the euro, and the commitment of traders is starting to come around. You can see the weakness in the pound, and the commitment of traders has not started to come around, so it's not showing any strength in the pound. So there's nothing kind of going on there. Now, last two charts, Aussie dollar, Canadian dollar, and we've had really nice move in both of these. You can see the Aussie dollar bottomed out with pullback to end of trend on the lowest time frame and on the highest time frame after we'd had flush patterns and a big dip down. Huge number of blue professional bars came in here at the 60 whatevers, and I was able to get out of some of my Aussie short, but not entirely. And the reason why I haven't entirely got out of it is, here's the highest time frame, cyclical support in here, we're way below it, and we have to make pullback to end of trend. So the way I think this is going to run out, I think we're going to reach a pullback to end of trend on the lowest time frame, which will sync up with that cyclical resistance on this highest time frame, and we'll have that play back down, pullback to end of trend on the Aussie chart. And we've had our exhaustion buy and bearish divergence, so I think this strength has gone. Maybe it could go a little bit further, maybe it could, but we've still got to have that push back down, pull back to end of trend. And again, this is a commodity based currency. It's going to follow the crude and the copper type patterns, and Canadian dollar, the loonie, same thing. There's that V reversal that we had at 68 kind of down here. Look at all these blue professional bars kind of come in, and then they buy up those lows. And again, we've had this strength over the last several months, but look, we're just like the Aussie, we're well below this cyclical support, so that's got to play out, pull back to end of trend on that highest time frame. So again, where this ends up, probably be a pullback to end of trend on the daily chart on the Canadian dollar and the Aussie dollar, and that'll sync up hopefully with cyclical resistance on that highest time frame, and we'll have that highest push down, that last kind of push down. So the commodity markets, crude and copper, we've still got to have that final push down with the commodity currencies, the Aussie dollar and the Canadian dollar. We've shown some early strength in those, but we've still got to put in that final pullback to end of trend to bottom those currencies. Once that's over, then we can have a rally in that kind of whole complex. The early mover has been gold and silver, definitely kind of getting on its way. And then on the other flip side of things, we've got the euro and the Japanese yen, kind of. And I don't think the strength in the euro and the Japanese yen is because money's flooding into a potentially strong investment scenario in the euro zone or Japan. I think the money's flooding into the euro and the yen because it's repatriating funds and fixing up balance sheets. So I think there's kind of trouble ahead, and then we'll have a decline in the dollar index and unwind of that Japanese yen carry trade, and all of a sudden we max out on the equities market and kind of come on down. So a little bit of a long kind of rambling video, but the key takeaway is just keep in tune with this highest time frame, whether you're day trading, swing trading, or long-term investing. Just keep in tune with that highest time frame, because it shows you where finally we get kind of trending energy exhausting itself and reversing and going into other moves, and we're just a little bit too early in a few of those markets, and people are getting very excited talking about the bouncing crude and so on. But just wait, we've got another downswing to play out over the next several months. Anyway, so I hope your trading is going well, and I hope you enjoyed that video.